Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. General disclosure, all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure. Trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The focus of my presentation and the focus of the Options-Doug chat channel in Discord is options, order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. Well, it looks like I'm having a problem with OBS Studio. And can someone listening and watching in YouTube confirm, can you hear me? Can you see my screen? All right, it looks like I'm good. All right, thank you, Second Winds. All right, so as I was saying, I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step of my process is execution. And I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis. And for setups, for entries and exits. And when I talk about setups, I will be talking about setups in an underlying asset, analysis based on order flow and hedging flow, and those setups can be taken any number of ways with futures, shares of stock, or options. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel in Discord as well as the chat in YouTube for your questions and comments. And for those of all you who confirmed you can hear me now, thank you for the confirmation in YouTube. That was an OBS Studio. That's what I use. That's the software that I use to stream to YouTube. So again, thank you. Thank you all. Hello, Second Winds. Hello, Karma FX. Glad you're all here. All right, my agenda for today, I want to go over news items, economic data, and events and earnings for today as well as the rest of the week. Then I'll go through my positional analysis. Then I'll review setups from this morning. And then I'll talk about the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know, and I will do that. All right, news items. So there was, I guess, some minor data that came out this morning. PMI manufacturing data at 9:45 and 10 a.m. Eastern Time. I don't know if that was the cause of a drop. But anyway, the data today came in line, looks like in line with expectations, but PMI data still less than 50, so indicating contraction. And then for the rest of the week, AMD reports earnings after the market closes today. And then on Friday, there's more PMI data at 10 a.m., services PMI. And then more importantly, Apple and Amazon report earnings after the market close. So that's on Thursday. And then Friday, the big economic data for the week is the employment report at 8:30 a.m. Eastern Time. All right, so that is the news items for the week. Now let's go to my positional analysis. I'm going to start with the S&P 500. This is the S&P 500 futures in Bookmap, ES futures. And before I take a closer look at this chart, I'm going to take a look at a larger time frame for SPX. So this is SPX in a 30-day 1-hour chart. And it is, SPX has really, since last Friday, been consolidating in a pretty narrow range between around 4570 and 4600. So let me point out some levels on this chart. Maybe a little bit difficult to see. The dashed purple lines are showing the lower and upper weekly expected move. That's based on the options market. And then the dashed blue lines are showing the lower and upper daily expected move, again based on the options market. So that's what the options market expects for today and for the week. Let me point out some Spotgamma levels now. These are proprietary Spotgamma levels. I'm going to point out the key levels. First of all, the 4500 put wall. The put wall is the strike with the largest net negative gamma that can be expected to act as support. And that level has, after oscillating around quite a bit last week, seems to have stabilized at 4500. So that's the put wall. That is the expected support level. So that is the potential floor for price, the SPX. And the next level up is the 4570 level. That's the volatility trigger. That is Spotgamma's proprietary gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade against price to hedge their delta exposure, and that tends to enhance or increase volatility. On the other hand, above that level, like SPX is trading now, just slightly above, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure, and that tends to subdue volatility. And then the next level up is the 4600 level, and that is the absolute gamma strike, and that's the strike with the largest absolute gamma. And note now the call wall has moved up to 4650. That's the strike with the largest net positive gamma, and that can be expected to act as resistance. So that level did move up from 4600 yesterday to 4650 today, and this is what Spotgamma has been forecasting, is a slow grind up as call walls shifted higher, and that's exactly what happened today. Both the call wall for SPX and SPY both moved higher slightly. SPX to 4650 and SPY to 462. All right, so bullish shifts higher in the call walls for SPX and SPY, raising the ceiling for price action. Let's take a look at one other SPX chart. We'll take a look at the levels that are in play for today. This is SPX in a 1-day, 1-minute chart. Let me zoom out to get the entire day here. So the key levels in play for today are, first of all, the lower daily expected move, and then just right above that, the volatility trigger at 4570. And those levels, around those levels, not precisely, have acted as support today. And SPX is trading in a very narrow range today. I'll talk about setups in a few minutes. I guess the way I look at things, there was really only one good good setup, good short setup. I'll talk about that again in a few minutes. So here's the ES futures in Bookmap. I have my own cloud notes here, and I'm showing the SPX levels. There's the 4570 volatility trigger. And note there is a difference in points, a difference in price between ES and SPX. And today I have that at about 24 points. So that's why this SPX 4570 is actually at ES 4594. So I also have SPY levels on this chart. There's the SPY 457.0 gamma level that did act as resistance earlier today for that short setup in the morning. And then here's the SPY 456 volatility trigger, and price has moved up and down around that level for quite a while today. Now it looks like it may be acting as support. And then just below that, that's the lower daily expected move for ES. And it's a little bit different for ES than SPX. All right, so those are the levels in play today for the S&P 500. Trading in a narrow range again. And I talked about shifts in levels, call walls for SPX and SPY shifted higher slightly. All right, let's take a look at NASDAQ. So NASDAQ has been much stronger than the S&P 500 today. Let's take a look at some levels in play for today. I'm going to go to a QQQ chart first. So I'm showing round number levels for QQQ as well as Spotgamma levels. So the Spotgamma level in play for today is the 383 volatility trigger. And note that the 382 level did act as support earlier today. And the 383 level has acted as resistance until price broke out above and now is trading down below. Excuse me. All right, so let's go back to the NASDAQ futures in Bookmap. I have my cloud notes for NQ as well. So I'm showing the QQQ round numbers, and the Spotgamma levels are noted with a different color here, white with a red number. There's the 383 volatility trigger that did act as resistance earlier. Here's the 382 level acting as support, and then the 381 level also acting as support in the morning. Right, so those are the levels in play for today for the S&P for the NASDAQ. QQQ round numbers have definitely been in play for today, as well as the NQ round numbers, the zeros and the 50s. And for NASDAQ, the volatility triggers for NDX and QQQ did move higher. So minor shifts in levels for NDX and QQQ volatility triggers shifted higher. The call walls and absolute gamma strikes remain at their current levels. No changes there. And for all the index products, there were no changes to the put walls. All right, Danilo asks, how can we get gamma levels? Hello. Um, Gamma levels, these spot gamma levels are available to Spotgamma subscribers. So if you subscribe to Spotgamma, any level of subscription, you should be able to have access to these notes. Spotgamma does provide cloud notes. I prefer to use my own notes. I can keep the ES to SPX price difference up to date, closer to the actual level, as well as show SPY levels, QQQ levels, other levels that I want to show. So I just have one level of one column of notes here. It does take some work on my part, but I prefer just to have one column. But if you want the cloud notes from Spotgamma with the Spotgamma levels, you need to subscribe to Spotgamma. So I hope that helps. All right, so those are the levels in play for today. For NASDAQ, shifts and levels minor. And note for the S&P 500, it has really been, after the initial moves up and down, been chopping in a range somewhere in the middle of the range, whereas the NASDAQ has been chopping around at the upper end of the range and testing the 383 volatility trigger a number of times. All right, let's take a look at gamma notional and see how market makers were positioned on the gamma curve at the beginning of the day. That's what I want to take a look at. Again, market makers position on the gamma curve, and this gives us an indication of how market makers may have to trade with changes in price and applied volatility. And this is showing gamma notional, market makers position on the gamma curve for SPX, SPY, NDX, and QQQ. And note for SPX and SPY, the numbers are both positive. At the beginning of the day, market makers position on the gamma curve was positive, although it was slightly less positive for SPX than yesterday, minor shift lower. And then for SPY, the numbers shifted from negative yesterday to positive today. So pretty neutral for SPY. And then for QQQ, the numbers shifted from slightly positive yesterday to slightly negative today. So overall, though, a very neutral gamma notional position. And in this type of environment, that leads to a lot of range days. Now, if gamma notional was, I guess, very negative for these indices, then that would lead me to look for more trending days, wider range, higher volatility. On the other hand, like today, I was looking for lower volatility and more of a range day. All right, so that is the that's my positional analysis. Again, my thesis for the day was excuse me, looking for lower volatility, range day, and slightly bullish directional bias based on the shifts higher in the call walls for SPX and SPY. All right, let's take a look at some setups now. I'm going to start with the hero signal for the S&P 500. What this chart is showing is SPX price. This is from Spotgamma. This is the hero indicator. Hero stands for Hedging Impact Real-Time Options. So it's showing price for SPX and options trades and market maker hedging activity for a combined signal of SPX, SPY, XSP, and ES futures, all combined into one signal. And note this number is slightly negative for the day, but has been trending higher since around 11 a.m. Eastern Time. All right, let's take a look. I'm going to zoom in on this now. I'm going to focus on the morning session, the setup that I pointed out this morning, just right around 10 a.m. And this was a divergent setup that I really like. So Hero started moving lower, so traders were taking negative delta positions. And market makers, when traders take negative delta positions, market makers are taking the opposite side of those trades, and they have to sell futures to hedge their delta exposure. So traders started taking negative delta positions as the S&P 500 price was moving higher. And let's go take a look at Bookmap and see what happened. Go back to the S&P 500. I'm going to zoom in. So this is the setup that I pointed out. And it's the reversal around the 450 SPY 457.0 gamma level. Right here. Note the trend break, and there's not quite a retest of that level. You can see all the aggressive sellers starting to come in. A shift in green dots as price is moving up, and aggressive sellers shown by the pink dots. Those are market buy orders, buy minus sell. And price breaks the trend, does a retest of the 457 level, doesn't quite hit it. It looks like it may be a tick off, and then moves lower as aggressive sellers and options traders take price all the way down to the 4570 SPX volatility trigger. And note that this move lower was fueled by sell stop orders shown by the falling yellow line, as well as aggressive sellers shown by cumulative volume delta. And you can just see the bearish order flow there in Bookmap. All the pink dots fueled by sell stop orders. And note that as price drops, larger traders start to come in with iceberg orders. I like to look at these in the subchart in sun mode so I can see the trend of iceberg orders, and I can see the events here with the on-chart indicator. So I can see that larger traders are starting to come in buying ES with iceberg orders, and price moves higher. Let's see what options traders were doing then. Let's go back to Hero. So this is around 1020. Hero starts to rise as price moves down to around that SPX 4570 level. Options traders start taking positive delta positions, and market makers are buying futures to hedge their delta exposure, and price moves higher. And note this setup was very similar to yesterday. So today, the timing was a little bit different. So in my notes for today, I have a divergent short at 10:05 and then a divergence long at 10:20. So that's what I just talked about, the divergence short 10.05 and divergence long at 10.20 after that quick drop lower. These are my notes from yesterday. Divergence short at 9:45 and divergence long at 10. So the timing was a little bit different yesterday, but the setup just the same. Quick drop, and then as options traders are taking negative delta positions, and then options traders quickly come in and start taking positive delta positions as price moves lower and price reverses higher. All right, I'm zooming out, trying to get the entire RTH session here. So this is the cash open at 9:30. Let's see what traders are doing now. Take a little bit, dig into this a little bit. And this is pretty typical. This rising orange line shows that traders are buying calls today. Note the number is positive. Traders are buying calls, and they're also buying puts. That's shown by the falling blue line as well as the negative number here. So they're buying calls and buying puts. The put number is larger, minus 3.7 billion, versus the call number at positive 2.7 billion. Put buyers more aggressive. And net, the total number is just around, just slightly less than minus 1 billion. So far for today, traders are taking negative delta positions net in the S&P 500. Let's go back to Bookmap. So again, this led to a couple of good setups here. The short, especially, that I pointed out, very easy read in Bookmap. The order flow, very easy read. And then long as well, as aggressive buyers start to come in, larger traders buying with iceberg orders, and traders are taking positive delta positions. All right, since then, the S&P 500 again chopping around, kind of in the middle of the range for today. All right, let's take a look at NASDAQ. All right, NASDAQ, let's go take a look at Hero, see what options traders are doing. So for NASDAQ, I'm going to take a look at a combined signal for NDX and QQQ. So similar to the signal for the S&P 500, this is a combined signal and not as easy to read as the S&P 500 for sure today. I'm going to zoom in on this and see if we can zoom in and get a little bit more clarity. So looking at this for the first hour or so, it becomes a little bit more clear. This divergent short, pretty similar to the S&P 500, just around 10.05. Then Hero starts to rise, doesn't rise long, but starts to rise, and then price follows a few minutes later. All right, let's go take a look at Bookmap now. Go to the NASDAQ. I'm going to zoom in. Sorry, it'll take me a moment to adjust my screen here. All right, so here's the short setup. Right around 10:05, 10:10. You can see the shift in order flow. Aggressive sellers start to come in. You can see all the pink dots there, as well as the falling CVD line. That's the pink line. And then the move lower, fueled by sell stop orders. And just like the S&P 500, larger traders start to come in with iceberg orders, shown by the falling light blue line. You can see the iceberg orders there, buying on the way down. That's pretty typical. And then price tests 381, QQQ 381 a couple of times, and then finally moves higher as aggressive buyers start to come in and options traders started taking positive delta positions. All right, so Obsess asks, what is HIRO again? HIRO is actually HIRO. That is Hedging Impact of Real-Time Options, and that is available from Spotgamma with a Spotgamma Alpha subscription, and that is showing options trades and market maker hedging activity for a variety of instruments, indices as well as single stocks. And one of my key tenets is that options trades and market maker hedging activity are key drivers of equity index products, especially ES and NQ. Not every day, not all the time every day, but often enough that it is a very important driver of price action. I've shown that over and over again, and also for many single stocks. Traders are very actively trading options in the stocks that I follow, and options trades and market maker hedging activity is a key driver of price action for these stocks. And hello, Loki, glad you're here. All right, so Obsess, I suggest, if you have more questions about HIRO, go to the Spotgamma website, go to the Spotgamma YouTube channel, watch my live streams every day. I talk about it every day. All right, so there's the short setup and the long setup in NASDAQ. Since then, NASDAQ has been quite a bit stronger than the S&P 500. All right, let's take a look at some stocks. I'm going to start with AMD since it is reporting earnings. Since it reports earnings after the close, let's start with AMD. AMD has been strong today. Let's take a look at HIRO and see what options traders are doing. Let's go to AMD. So what this is showing, it's a little bit choppy. We'll zoom in on this. So Obsess, this should help. This is showing, and Meta is a much better example today. We'll see in a minute. So what this chart is showing is overall net for the day, traders are buying calls. This number is positive. The orange line is rising. Traders are buying calls. When traders buy calls, market makers sell the calls, and they have to buy stock to hedge their delta exposure. They want to remain delta neutral, and this is a very reliable driver of price action again in many stocks, especially these large cap tech stocks that I follow. So they are buying calls. They're also buying puts, but the number for calls is much higher, 69 million versus negative 9 million for puts. So net for the day, they're taking positive delta positions, and market makers are buying stock to hedge their delta exposure. And note that 115 is the key gamma strike. And again, call buyers are buying calls ahead of earnings. Let's go back to Bookmap. $115 is the key gamma strike. And price chopped around that level and then finally moved higher. Let's see where AMD may be headed. Liquidity, a lot of liquidity, resting sell orders in the order book at 118, a little bit less than 119, and then quite a few at 120. And note the liquidity that came in to the order book right before 12:30 at the 116.50 level. They were looking to get filled with limit buy orders at 116.50, and price was too strong. They did not get filled. And we'll go back and see. Go back to Hero. Look for other Spotgamma levels. So 120 is the call wall. That's a strike with the largest net positive gamma. And that, with all the liquidity at that level, that could be an attraction for price. All right, so Victor Ben says sell divergence on SOX now. Do you mean the semiconductor index or SPX? Is that a typo, or do you mean SOX? I don't recall seeing SOX in Hero. Maybe I'm wrong. All right, so that's AMD. Let's take a look at Meta. And Meta, here's a very clear example of how options trades can drive price. So in Meta, traders are buying calls, shown by the rising orange line, the positive notional value, and they're also selling puts. And that is shown by the rising blue line and the positive notional value for puts as well. So when traders are buying calls and selling puts, market makers are taking the opposite side of that, and they have to buy stock to hedge their delta exposure. Let's go back to the total signal. And notice how when this Hero signal levels off, price levels off, very strong correlation between hedging flow and price action. Now it looks like Meta may be rolling over a little bit. Call wall up above at 330. All right, let's go take a look at Bookmap. And we'll get back to Victor Ben. We'll get back to SPX in just a few minutes when we take a look at the live market. So let's go back. And AMD still very strong today. Here's Meta. Great move higher this morning as traders were buying calls and selling puts. Then finally some aggressive sellers start to come in at 324 as options traders took their foot off the gas, and now price is moving lower. So again, Meta, for those of you who may not be familiar with this concept, a great example of how options trades can drive price. Let's take a look at Microsoft. Not quite as clear, but not a straight line, straight trend up. Let's see what option traders are doing, but definitely buying calls. So here's another example. And Microsoft traders are buying calls and selling puts. Both numbers are positive. And price reverses higher right around 1020 as traders stop buying puts, they start selling puts, and they resume buying calls, and price moves higher. Let's go take a look at Bookmap. So here's the reversal. Let's zoom in on this. As traders again stopped buying puts, started selling puts, and they resumed buying calls. Reversal at right around 334. Price jumps pretty quickly up to 338. Let's go back to Hero and see, look for gamma levels in place. So here's the 340 call wall and the key gamma strike. So a potential target. All right, so Obsessed says there's a lot to learn with this thing. I'm still learning how the Greeks work. Take your time. This is something that may take a while to grasp. I would again recommend the Spotgamma website. I think they have an excellent support center with basic information about the Greeks, about strategies, as well as their proprietary levels, and also Hero. So go to the free resources on the Spotgamma website. Great information that should help. But again, take your time. This is something that may not be easy to grasp, but once you start to see it, it starts to make a lot of sense. All right, so traders buying calls and selling puts and driving Microsoft price higher. And there was something else I wanted to take a look at. Let's go back to Bookmap. Take a look at NVIDIA. There was some question yesterday about traders pulling liquidity, adding liquidity, fills at different levels. So this may not be the greatest example. Let's see. So I'm going to look at the heat map here. So this is an example of traders pulling liquidity and then adding liquidity at different levels. So this, again, not the greatest example. Notice how this is the heat map showing a history of orders, limit orders in the order book. Notice how some of the liquidity is pulled at this level. Some of the traders do not want to sell at this level anymore, and there's a slight shift in liquidity right there. It's probably impossible to see. So they are taking some of those sell orders away, and then they're adding here. So they're deciding now they don't want to be filled at 46.70, 467.50, and 468. They want to be filled at 469 with their sell orders. So when this happens, and again, it's difficult to see here. This is when traders are pulling orders, that is an indication of price may move higher. And you would also like to see more and Bruce, Director of Education at Bookmap, talks about this quite a bit. You would also like to see the buy orders coming in like this one right here, helping to move price higher. All right, so that's NVIDIA. Overall strong day for NVIDIA. Let's just go take a look at Hero. It was pretty choppy. Go to NVIDIA. Zoom in on the morning, this reversal higher. So options trades are typically a pretty strong driver of price action in NVIDIA. And notice that traders initially from the open were taking negative delta positions, and then as that slows down and starts to rise, NVIDIA price starts to rise. So the hedging flow shifts from negative delta to positive delta, and NVIDIA moves higher. All right, so Obsess asks, does that accumulate calls and puts of strikes on the day? Does it account for longer term options buys or just zero DTE? So let's go back to the S&P 500 to answer that question. So in S&P 500 for SPX, SPY, and ES, I'm not sure about XSP, they're options that expire every day. Zero DTE and weeklies, monthlies. So we can take a look. This is showing all expirations, all trades. This is all expirations. And we can turn on the next expiry. So that is showing options that expire today. Now, if we did this in a stock, it would be showing next expiry. That would be the Friday expirations. For stock, single stocks, they have options that expire once a week every Friday, as well as the monthly expirations. And again, for the S&P 500, SPX, SPY, and ES have options that expire every day. So this green line is showing the 0 DTE trades. And let's just turn off all trades and just look at 0 DTE. So this is pretty clearly a strong driver of price action today. The 0 DTE trades in the S&P 500. You can see the divergence short, divergence long, and then options traders continue to take positive delta positions in the S&P 500. And then we can refine this even further, looking at puts and calls. So they are in 0 DTE, they're buying calls and buying puts. Call buyers a little bit more aggressive. All right, so obsessed, this is showing 0 DTE. These are options that expire today. They will have no impact on open interest, so that just based on the 0 DTE trade, this will have no impact on the Spotgamma levels. Again, these expire at the end of the day. And then the all trades, if these trades are not closed at the end of the day, then they could have an impact on the Spotgamma levels. So the Spotgamma levels that I talked about in my positional analysis are based on gamma weighted open interest. All right, so Victor Ben earlier mentioned the divergence in SPX. We'll take a look at the S&P 500. Talking about a sell divergence, and then we'll take so this is the combined signal, total signal. Let's just zoom in on the last few minutes. Again, looking at the total all expirations here, that is the divergence lower, and price is moving lower. Let's see where price was when traders started taking negative delta positions. We'll go back to Bookmap. All right, so obsess, the Spotgamma levels are based on open interest, but they're again, they're gamma weighting. They have their own proprietary algorithms that they use to develop these levels. So the raw data that they use is open interest. That comes out once a daily, sometime during the night. So they get that data, applied their proprietary algorithms to come up with the key levels that I talked about earlier, the put wall, the call wall, the absolute gamma strike, the volatility trigger. The basis for that information, the raw data, is the open interest. All right, so it looks like S&P 500 approaching the 457 0 gamma level, and let's options traders started taking negative delta positions, and note that larger traders also starting to sell with iceberg orders. As price approaches that level. And obsess says taking negative delta or positive delta has to learn exactly how market makers hedge with stock because that's new, that's interesting. Yeah, it is. Key driver of price action and many stocks. That's why you can see the stocks that I follow here in Bookmap. That's the Magnificent Seven plus AMD plus QQQ and SPY all have very active options that are key driver of price action. Or let's go back and look at Hero. So this is interesting. Good spot, Victor Ben finally playing off. This is a setup that I like. Watching a divergence in Hero, so price is rising up to a level that you expect to act as resistance, that may act as resistance. So we know that 457 was a resistance level earlier today. Price doesn't quite make it up there today. And options traders start taking negative delta positions, and larger traders start coming in with iceberg orders. Sell iceberg orders, and price moves lower. Very nice divergent setup, great spot, Victor Ben. Let's go back and take a look at Hero. So there's the S&P 500, there's 500, there's the divergence. All right, let me check for questions. Yeah, gamma is the rate of change of delta. And open interest is different from volume. So again, open interest, those are orders that are held. Those are open positions, and volume is the volume for today. So let's take a look at. Let's go to SPX. Go to an options chain. Let's go to Friday expiration. So this is Friday expiration. So it may be hard to see. I'm showing volume and open interest. So this number will not change during the day. It only changes overnight. These numbers will be different. So they'll change tomorrow as the open interest data is updated with the latest positions. These are positions that are held, open positions, and then the volume is what's traded today. So these numbers will change. The volume numbers will change constantly during the day. Let's see, we can go to the so notice here the volume on the left, open interest on the right. The open interest numbers will not change today, and these numbers will change constantly during the day. So that's the volume of contracts, bought or sold. Those are calls. All right, so there you go. There's the difference between open interest and volume. Let's go back to the S&P 500, check on that setup. Zoom in a little bit more here. So price reversed lower, just below the 457 zero gamma level. Let me just check a SPY chart to make sure that is accurate. That ES to SPY ratio may change some during the day. Yeah, that is right. So price SPY did not quite get to that level before reversing lower. All right, so Obsess says open positions, got it. So would float be something to look at in Confluence? No, I don't think so. I don't look at float. That's not something that I look at. I just stick with options here. All right, my time is up. I want to thank you for your questions and comments. Thanks everyone for watching. Remember, AMD reports earnings after the close today. All right, again, thanks for watching. Thanks for your questions and comments, and I will see you tomorrow. Bye.